Welcome to the Rise of the Trades podcast, the show dedicated to helping you to build, grow, and scale your trades or construction business. All rise for your host, Craig Wilkinson.
Welcome to this week's coaching episode of the Rise of the Trades podcast, where we help trades and construction business owners to skyrocket leads, explode net profits without having to graft 60 hours a week and becoming that busy fool. In this episode, I'm going to be teaching you how to correctly calculate your hourly labour rates and your overhead contribution that needs adding into the pricing of your jobs. You see, we've got to stop undercharging and losing money on labour and pricing jobs and flip that into increasing our profits. But before we go there, I'd just like to announce that our priority waiting list for you to be able to apply to join my inner circle is now open for you to add yourself to. My Inner Circle is a marketing and business coaching program where I personally coach you and guarantee that I'll grow your business by an absolute bare minimum, and I mean this, a bare minimum of 100% over the next 12 months. So if you want to increase your profit margins, generate more leads, systemize your business, free up your time and build a team to scale your business, consider adding yourself to our priority waiting list, and the link to the waiting list is in the show notes and the description of this episode. Now let's transition over to this week's coaching episode. The vast majority of trades and construction business owners do not have a clue when it comes to making profit without having to overpay on taxes. You see, when we first set up our business, nobody teaches us all the numbers in the business. Nobody sits us down and correctly runs through every number, shows us how to price jobs, shows us how to make profit and what do we do with that profit, what assets can we invest that profit into, how can we stop overpaying on taxes, because I almost guarantee that most of you will be overpaying on taxes because you've got a poor accountant. And I were exactly the same when I first set up my joinery business back in 1994. Nobody showed me how to do this. It was just a new skill that I had to learn. So here's me pricing jobs, thinking how much time it's going to take me, thinking how many materials or cost of materials is going to be, trying to work out and fathom out, do I add something on to cover these things called overheads? What are profit margins? All this lot were new to me when I set up my business. And I made some big mistakes when pricing jobs over those early years. And I know for sure that many of you that are listening to this episode right now will be making the same classic mistakes that I made 30 odd years ago. And you'll be making the same mistakes as everybody else is out there thinking they're pricing the jobs correctly, but in actual fact, you're nowhere near. And having coached over 30,000 trades business owners over the last 13 years, I know that most of you don't understand how to work out things like your hourly rates. You don't know how to factor in your overhead contribution into pricing a job. You're winging it when it comes to pricing. You've got no idea of things like your break-even figures, or how to work out your gross or net profit margins on jobs, and you're not looking at the job after you've done it and doing a post-mortem and saying, look, this is what I quoted and what I allowed to go into the job, but these are the actual numbers and this is how the job ended up panning out. And looking at them numbers and going, right, what's gone right? Because whatever's gone right, we're going to keep doing more of or even increase them prices. Or more importantly, what's gone wrong? Have I not allowed enough labour? Have I not allowed enough for materials? If I have, why haven't I made profit? Have you taken into consideration your overheads within that job duration? Have you added the right gross and net profit margins on? And the answer to this for most people is, you know what, Craig? I've heard all this and I know all these numbers. I've heard you talking about it, other people, my accountant talks to me about it. But in all honesty, I don't know really what I'm doing. I am winging it, and that's exactly where I used to be. And have you ever done this when pricing a job? And I probably guarantee you've done it, where you put a price together and you're looking at it and you're thinking, fucking hell, that looks a bit steep. That looks a bit pricey, that. Have I added this lot up right? And you add it up again and you look at figure and figure's not changed and you think, fucking hell, I can't put price in at that. If I put that price in, I'm never going to win job. So what do? You just conjure up a random figure from nowhere. And you go, do you know what? I'll knock £2,000 off this. Or I'll knock 750 quid off it. And I'll bring that price down. Oh, that looks a bit better. And then you put the price in and you win the job. And then you go, fucking hell, why did I reduce price? If you've done that or are doing that, you've got no idea what you're doing when you're pricing jobs. And this has got to stop, because you can't build and grow and scale a business if you're winging it with the numbers. I mean, come on. You're in the business of making money. You're in the business of making profit. That's what a business should do. And yes, I accept that the trigger and the driver for everyone is not money. That might not be what drives you. But you can't get away from the fact that if you are not making profit and a healthy profit in your business, then you're never going to get the lifestyle that you or your family deserves from all the hard work. Because let's face it, the profits left over in your business are a financial reward for the effort that you've put in. And that financial reward, however big or small it is going to determine your lifestyle. And I take it that you want to have a better lifestyle for you and your family than you have right now. Therefore, we've got to start making more profit. But to make more profit, we've got to understand how the numbers work within the business. And I have loads of people come to me and say, Craig, something's going wrong in my business because I've been trading now for, 5 years, 7, 10 years, and I'm not making enough profit. There's something going wrong. What do I need to do? And when I stop and I look and take stock and look at the numbers and look at the products and services and everything that they're offering, it generally means that they've made some poor or bad decisions when it comes to finances at some point further down the line or in the past, which then leads to having poor cash flow. In other words, you've got more money going out of your bank than you've got coming in. So now you've got money problems. The payment terms are all over the show. So they've not sped up the flow of cash coming in by changing the payment terms to suit their business. They're not pricing jobs correctly. They've got no VAT or tax pots or money or accounts set to one side where they're separating the money. So they've been using the VAT and the tax money as to dip into to keep them afloat, to pay the wages, to pay the materials. They then had to go and get overdrafts to bail them out. And then when the overdrafts aren't enough, they go and rack up the Visa cards. So now they're up to the hilt with the visas. And then when that's not enough, they go out and take loans. And then they've got to start personally guaranteeing the loans against the business. And then all of a sudden, that debt starts to spiral. And because of poor, bad decisions based on cash and finance in the past, all that lot multiplies and it catches up with you and it comes to bite you in the arse. Now, I don't know about you, But does it not make sense before you even get to anything like that to say to yourself, do you know what? He's right. I am running a business. And the two most important currencies in business is money and time. So if you don't get top side of the money and the numbers in your business, you are going to at some point go into some kind of financial difficulty. And when you start slipping into that negative cash flow situation, it's really, really hard to get yourself out of it because it demotivates you. You start to fall out of love with your business. You start to have sleepless nights worrying about how you're going to pay your VAT and your wages and your suppliers. Then what happens is all the relationships at home start to creep in because financially it's putting pressure on your shoulders and your relationships at home start to crack. Now, knowing all this, myself and our accountancy partner decided that we were going to spend the whole of this month totally dedicated to cash and finance to help as many of you out as we can to overcome these financial challenges that you might have got and to put you on the straight and narrow so you can start to understand these numbers. So we committed to the whole of this month dedicating that time and investment into helping you, right? Now, if you haven't listened to episode number 60, which is an interview with me and Julie going through these numbers, I'd encourage you to go back and listen to episode number 60. Then last week's episode, number 61, was all about the 5 numbers that you must have in your business if you want to avoid getting into debt and liquidation. And I share with you on last week's episode 61, how I literally prevented a electrical contractor that had got loads of work on. He was just about to take 110 grand commercial job on. And I worked his numbers out and he didn't even realise, but if he'd have took that job on, he would have gone into liquidation and bust within 4 months. So go and check out episode 60 and 61. But also, if you are listening to this on our dedicated podcast website, our Trades Freedom Club website, right, which I would encourage you to listen to them on, you'll see that we've built a dedicated website for this podcast alone. And on the homepage of the website, we've got topic tags, which filters down all the different coaching episodes and strategies that we share. It filters them down. And I've just run a quick filter now on the finances topic tag. And so far I've done 18 coaching sessions all on cash and finance and tax and profit. That lot is there waiting for you to go and get stuck into. So I'd encourage you at the end of this session to go and listen to episodes 60 and 61 and then go and check out the finance topic tag on our website and go and indulge yourself and submerge yourself in the other 18 episodes that's going to help you to understand the numbers in your business, make more profit without overpaying on taxes. Now, as part of this full month working on the numbers, Thursday evening last week, myself and Julie Robinson from Footprints Accountancy, we did a live training session all on the numbers in your business exclusively for our Growth Club members. And all our Growth Club members joined us on that live session. But in the lead up to that session, I said to Julie, listen, there is nowhere out there where anybody can go and either purchase or get free resources to some kind of pricing or profit calculator. It doesn't exist. So what I said to Julie is, right, as we come into this month, what I want us to create is the ultimate pricing and profit calculator. And me and Julie behind the scenes have been working hard on building a spreadsheet, and on that spreadsheet it works out every single number that you need to understand by you just inputting numbers into fields, and it just calculates everything for you. So let me just give you a flavour and an example of what I'm talking about. This spreadsheet calculator is going to do everything that I'm going to share with you on this episode today. So it's going to work out what your actual costs are for employing labour, how to work out how many billable days you're going to bill your labour out for throughout the year. It's also going to work out how many hours a day you get out of your team, because you don't get 100% productivity out of them every day, do you? It's also going to work out what your hourly rate actually is based on things like pension contributions and national insurance contributions that you need to pay for employed staff. It then goes and works out what your overheads are and how you're going to factor your overheads into pricing a job. It then goes on to work out your break-even figures. And I'm talking about your annual break-even figure, right? Your quarterly break-even, monthly break-even, weekly break-even, daily break-even, and I've even done it so it works out an hourly break-even figure in your business. We've then built in a job pricing calculator. So to price jobs correctly, you're going to need like your labour and your materials and your overheads and any other things like expenses or unforeseen things that might crop up on a job or additional costs. It works out how much margin you add onto your labour, how much margin you add onto your materials. It calculates the whole job up for you, and it even gives you a box for you to be able to input your own profit margin on what you want to get out of the job. It does that instantly. And then after the job's completed, we've then built a profit and loss calculator. So it's going to pull through all the original numbers that you quoted. And then there's a calculator where you actually input the cost of the job once you've done it. So if there's any changes to labour and materials or overheads, you put that in, and then it works out your gross profit and your net profit after tax margins. So you know how much profit you've made. So this calculator, we've been working on tirelessly for weeks behind the scenes. So on Thursday night session, live, we demoed and showed our Growth Club members this spreadsheet that we've built, and everyone was just absolutely blown away. And then people were saying, that's amazing, I want it, how much does it cost? How can I buy it? And we're like, listen, we're giving it you for free. They're like, what? I'm like, yeah, we want to help you. You know that our mission is to help 1 million trades, men and women, achieve time and financial freedom. So the only way we can do that is by giving you this for free. So as a Growth Club member, once you're a member, you don't even have to pay for this calculator. It's going to run your entire business for you. All that lot's now inside the Growth Club, and everybody were blown away. Oh, I can't believe you've done this for us. It's amazing. I'm like, yeah, it is, but you've got to use it. And all you need to do to use it is just punch some numbers in, and it ripples through and gives you all the pricing, all the profit, everything. It just works everything out for you. But the starting point when pricing anything is to work out what actually does your labour cost, and what does your overheads cost, because your labour and your overheads combined and added together ultimately determines your hourly rate on what you need to charge to cover your labour cost, in other words, your wages, and also all the overheads that are incurred whilst that job's ongoing. It covers all that lot. That's where we need to start. So given that on Thursday evening, people were like blown away with the employment cost and hourly rate calculator, what I'm going to do in this episode is I'm going to walk you through exactly step by step what you need to factor in to work out your hourly rate, including your overhead contribution. Now, I've got the calculator in front of me now, and I'm going to be punching numbers into this calculator. Now, you can't see this yet, unless you're a Growth Club member and you've got it in front of you. You can't see it. And even though you can't see it, I'm going to show you and demonstrate how easy this is for you to work out your numbers just simply by explaining this to you on audio without you even seeing it. You should be able to get and understand it. That's how easy we've made these calculators. So what I want you to do is grab a notepad and a pen or a tablet and make notes of what I'm going to share with you now. Then, when you get access to the calculator, which I'm going to share with you at the end of this episode, how you're going to do that, when you get access to it, you'll be able to use it immediately straight off the bat. So, grab a notepad, grab a pen, and let's get stuck in. Now, the first thing that we have to work out when working out our hourly rate is actually how much does it cost us to the penny to employ a member of staff, whether that's a plumber, a joiner, a brickie, a roofer, an apprentice, someone who's working on the tools, let's say in your business, and they are employed, not subcontract, they're employed. How much does it actually cost you? Because it doesn't just cost you their wages. There are other factors that we've got to factor in. Now, on this calculator, not only have we built this in for employed staff, but we've also built it in for subcontractors. Now, the reason why I'm choosing to use employed staff in this example is because with employed staff, you've got additional costs that you have to pay for an employed member of staff. Whereas a subcontractor, there are certain things that you don't have to pay them. So let's say the more complex example to show you or hear me is of an employed member of staff. But if you don't employ people and you just have subbies, you can still use the calculator. I'm just trying to show it you to its full extent. Now work through this example, and again, make notes because I'm going to show you how simple this is. Let's say for argument's sake, you've got a skilled tradesperson, right? And you're going to pay them £50,000 as a salary, right? So the first numbers I want you to write down is 50k. But the true cost of employing that member of staff is not 50k. Because on top of that, you've got national insurance contribution as an employer to pay to your employee. Now, you don't have to work this out on the calculator because as soon as you put 50 grand in, it's going to automatically work you out what that national insurance contribution figure is. And in this example, it's £6,750. But it doesn't stop there because as an employee, you have got to offer your employee a workplace pension. And that workplace pension can only be opted out of by the employee. Now, why an employee would ever want to opt out of getting free money from their employer, I've no idea. So the likelihood is nobody's going to opt out. You've got to pay a 3%, as it stands at the minute of recording this video anyway. The government have set it where it's 3%. Anything that you pay over £6,240, which in this case, it's 50 grand, so it's well over. Your employer's pension at 3% is automatically calculated from that 50 grand. And in this example, it's £1,313. So the true cost as it stands at the minute of employing this member of staff is the 50 grand in wages, £6,750 in NI and £1,313 in pension, which brings the total to £58,063. Now remember, you don't have to calculate any of these formulas. We've done it already. All you need to punch in is the annual salary is what, and then it instantly calculates what the true cost is. In this case, again, £58,063. Now, on the calculator, when you get access to it, you'll see that there's more fields like this to fill in, because you might have got more than one employee. And that other employee might be on a different wage. You'll also see that we've got subcontractors that you can add in. But as a subcontractor, you don't pay their NI, they pay it themselves. And you don't pay for their pension, they pay it themselves. So you can see here now that we've given you the option to put as many employees as you've got in and as many subbies, or you might not even use subbies. You can add that up and all this lot's going to start calculating your actually hourly rate of what it's costing you so far to employ a member of staff. Now remember, in this example, we're saying that it's £58,063 to employ this one member of staff. Now, the next thing that we've got to factor in to working out the hourly rate is how many working days a year is this one member of staff going to work? Because if we said, well, there's 5 working days a week times 52 weeks a year, right? Then, you know, we're looking at 260 working days a year on them rates, okay, on them numbers. So 5 days a week times 52 weeks a year works out at 260 workable days. But your employees don't work 260 days a year, do they? Because generally they've got 28 days paid holiday, which is their annual holiday leave they can have, plus bank holidays, adds up to 28 days. So we've got to deduct 28 off the 260. But then we've also got training days, because for some people, maybe electricians, maybe plumbing and heating engineers, maybe apprentices, they might have training days. Maybe you employ staff and there's no training days. That's fair enough. If there's no training days, there isn't any. But if there is, we've got to deduct those training days from the 260, because they are not earning you money while they're at training. So we can't factor that in. So in this example, I've just put 5 training days. And then also what we've got to do is we've got to factor in downtime days, as I call it. And what I mean by downtime days is, for some of you, you will have some downtime with bad weather. I mean, I used to do loft conversions, right? So as you can imagine, we can't strip roofs off when it's pissing down with rain or it's freezing cold with snow, right? So there were days where it's downtime. There's not a great deal we can do other than clean vans out and sweep lockup up and tidy up. There weren't a great deal we could do. So perhaps maybe you're a roofer or a renderer, right? And you're not going to, or a brickie, you're not going to lay bricks lower than -3 degrees. So there's going to be downtime days, right? Also, what about sick days? On average, how many sick days does an employee have per year? Because they're not earning you money while there's downtime days or while there's sick days. So just follow me through this. We started off at 260 working days. We're going to minus 28 for holidays. In this example, we're going to minus 5 days for training days. And we're going to minus another 5 days for downtime days, bringing the total amount of actual working days where we can bill our labour out at 222. Now again, you don't have to work this out because all this lot is calculated on the pricing calculator. It's done for you. So now we've only got 222 billable working days a year, not 260. Now, the next thing we're going to work out is actual billable working hours per day. And the reason why I say this is, let's say that your team get paid from 8 o'clock till 4:30, right? During that day, they are not working like machines and they work every minute of every day, do they? They don't. You've got to factor in time for breaks where they're not getting paid. You've got to factor in time for them tossing it off, messing about on social media and TikTok when your back's turned and they're prattling around. You've got to factor in time where they're chatting and factor in time where, listen, with best will in world, you might have got some great, conscientious, hard-working, reliable, trustworthy employees, but they're not working at 100 mile an hour all the time. At best, they're probably working at 70%. Are you with me? So we can't, as a business, bill them out for, let's say, 9 hours a day because they're not physically working 9 hours a day. They're only physically working maybe 7 hours a day. So the reason why we've got to factor this in is because they're not billable hours when they are tossing it off on the phone or whether they're chatting or they're being unproductive, right? They're only working for, on average, probably about 7 hours a day. You're getting 7 hours worth of work out of them, not 9. So in this pricing calculator, we've put a section in where you can choose what them billable hours per day are. If you want to bill them out at 9 hours a day, then do it. But you're not going to get 9 hours of work out of them. You're only going to get 7 out of them. Are you with me? But we've left a field for you to fill in. And in this example, I'm just going to put 7 hours a day. Now, what we need to do now is we need to go back to those 222 billable days that we've worked out, taking into consideration holidays, training days and downtime. That's how we got to 222 days. So if we take the 222 and we times it by 7 hours a day, so in other words, they're going to work 7 hours a day for 222 days throughout the year, that actually accumulates to 1,554 billable working hours for this particular employee who we've currently said is costing us £58,063 to employ. So to work out what their hourly rate actually is, taking into account everything that we've just covered, we're going to take the total cost of employing this member of staff, which is £58,063. And we're going to divide that cost by 1,554 billable hours throughout the year, working 222 days at 7 hours a day. That then works out at £37.36 per hour that actual member of staff is billed out at. Got you? Right. Now remember, £37.36 is just literally for you to break even on what it's costing you to employ that member of staff. You're not making money at this point. All you're doing is literally covering the cost of the £58,063 over 222 days, working 7 hours a day over them 222 days. All you're doing is breaking even. You're not making any money. You're just breaking even. But at least now, running them numbers, you can actually work out what the break-even figure is on your actual hourly rate of employing that one member of staff. Now, what we're going to do in the next chapter is we're now going to work out the hourly overhead rate of what it costs to run your business. And then what we're going to end up doing is taking the hourly break-even labour figure and the hourly break-even overhead figure and adding those two together, and those two figures is the break-even figure of what you need to bill out per hour to cover your labour and also your materials. So keep that notepad and pen tight. Let's move on to that next chapter. So when we're pricing a job, we've got to factor in that you've got running costs. You've got what we call overheads throughout the running of that job each month and each year. And these fixed overheads are things such as you might have got a vehicle that's on lease hire. You've got insurance, tax, test, MOT. You've got subscriptions that you pay for each month, maybe like Xero or Leadzilla or ServiceMate. You've got an accountant that you've got to pay for every year. You've got marketing spend that you've got to pay for. You might have got printing and stationery costs. You've got mobile phones. You've got laptops. You've got all these additional costs. You might have got rent, rates, utility bills. If you've got offices, are you with me? All these overheads are what you need to run your business. So in other words, for you to just literally get up in the morning and switch the lights on in your business and go to work, before you've even left your house to get in your van to drive to that job, you've got fixed costs that you've got to pay for over that year. Are you with me? Now, what we've got to do is we've got to factor in what these costs are, because these costs have got to be included within each job so that your customers and the profit that you're making on the jobs ultimately go towards the cost of running your business. These are what we call fixed overheads. Now, inside the fixed overheads is also a certain part of labour, let's call it. And just write this down. It's called indirect labour cost. That's what I call it, indirect labour cost. And let me just explain to you what I mean by indirect labour costs versus direct labour costs. Let's start off with direct labour. Direct labour is the person on the tools that's working on the job. So the plumber, the sparky, the scaffolder, the tiler, the plasterer, the roofer. And their wages, whether they are employed or subbies, you've included the cost of their labour within the job itself. So they're actually on the tools making you money, but their costs are what we call labour when we put in our prices together. But sometimes, depending on your business, you've got indirect costs. In other words, these are people such as maybe a virtual assistant or a full-time admin member of staff, or maybe the marketing company that you're using, or the health and safety company that you're using. Are you with me? Or the accountant that you're using. These are people that you still need to run your business, but they are not billed out in the labour costs on the job. So these are indirect members of staff that are going to be pulled together, and these go into our overhead contribution because they're not on the job. The accountant or the marketing company is not on the job first fixing that job, are they? So their wages, their cost is not included in the price of the job. We have to include their wages, their costs, their fees into our overheads because they still need paying for. Do you get me? So when we're talking about overheads, we're talking about all the costs associated to running your business. We've got to factor that in, and they've got to be paid for through pricing a job. So just for this hypothetical example, I've just typed into the calculator that the overheads altogether, all added up together in this fictitious business is costing £24,000 a year, which basically accumulates to £2,000 a month or £500 a week. Let's say it that way. So all you need to do is add up all of your running costs in your business, and whatever that figure is, you add into the calculator. That's it. Now, if you're a limited company, inside your limited company end of financial year accounts, you will have something called a profit and loss statement. And if you go and look at your profit and loss statement, it actually lists out all of your overheads in that financial accounting year. So if you want to go and grab them quick, that's where you get them from. However, you have to understand that if your accounts are 9 months old and your business has incurred additional overheads over that 9 months, you've got to add them on. If you're a sole trader and you haven't got a set of financial accounts, all I would ask you to do is go to your bank statements, fire up a spreadsheet or get a notepad and pen, and go through your last 12 months bank statements and have a look at all the additional costs, the additional overheads that have gone out of your bank to run your business, and add them up over that 12-month period. Either way, whether you're limited or a sole trader, all you simply do is come to the calculator and there's a field that says add your overhead cost in here. In this example, I've put £24,000 in. Then what we're going to do is we're going to look at the total billable hours for this particular employee. And what we said was, as there were 1,554 billable hours throughout the year for that one employee. So then what we're going to do is we're going to divide £24,000, the total cost of your overheads, by the total number of hours that this employee can work. In this example, 1,554, which is now costing out and calculating your overhead contribution per hour. And this comes to £15.44. So we know that every hour this person is working, 7 hours a day, 222 days a year, we've got to add on an extra £15.44 to cover the cost of the overheads, which are 24 grand throughout that year. Now, again, you don't have to work this out because as soon as you put 24 grand in, as my example, it just calculates this for you, all right? So now we've got £15.44. Now, this is just a hypothetical example, remember. £24,000 for one employee. But the likelihood is you're not going to just have 24 grand overheads on one employee. There might be two of you in the business, which means we've added an extra selling to tell us how many employees have you got that the £24,000 needs splitting and dividing over. Because in this case, we've got one employee taking all of that 24 grand up, so it's £15.44. But if I simply change that cell to say, I've got two employees that £24,000 needs spreading out across because they're both on the tools and they're both working, we take the 24,000, and then because we've got the two employees, it's the £15.44 for one employee is then divided by 2, because that 15.44 is spread over 2 employees, which now brings the hourly rate of the overhead down to £7.72 per employee. Are you with me? Now, if you have 3 employees, you just change the cell to 3, and it's going to divide the £24,000, divide it by 3 employees, and it's going to calculate what your overhead hourly rate needs to be. It's all done for you. But again, for this example, I'm just going to keep it at the 1 employee. So what we've now got, when we break this down, is your actual break-even figure of your hourly rate. We said we're £37.36. That's the actual cost of employing a member of staff on £50,000, working 220 days, 7 hours a day, which then includes, on top of that, your national insurance and your pension. We said all that lot were £37.36, break even. What we're now saying is, with the overheads, we've got £15.44 every hour that this person works, and that £15.44 is going to contribute towards the overheads. So when you add the £37.36 and the £15.44 together, that gives you a break-even billable hourly rate that covers labour and overheads at £52.81p. Times that by 7 hours a day that they're going to be working, gives you a £369.65 daily break-even on your labour and your overheads. So now we know that every hour that we factor into a job, if it's going to be a 7-hour job, we know that it's going to be £52.81 times 7 hours to do that job, which then accumulates to your £369.65 for them 7 hours. And that is exactly what the break-even figure is with your labour and your overheads. But remember, at this stage, all this is a break-even figure. You haven't even made a single penny profit, but it's costing you £52.81 or £369.65 a day just to employ that one member of staff. Now, when we ran through this on Thursday evening, and we actually got some of our Growth Club members using the calculator live while we were on the training, and subsequently the next couple of days after that session, sort of like Friday and then over weekend in our Growth Club, inside our Growth Club we've got a community where we ask people to put the wins in and, you know, any help or support they need. Our members were going away and working out what their actual hourly rate was. and their actual overhead contribution, and not one of them had got it right originally. So which means everything they've been pricing for the years and years that they've been in business, they weren't allowing enough for their labour because they'd not been including things like national insurance, they'd not been including pensions, they'd not been including training days or deducting downtime days, or they'd not been billing people out at, let's say, 7 hours a day. They'd been billing people out at 9 hours a day and thinking they were machines and they were going to work at 100% efficiency. They'd not been doing any of that. And they'd not been looking at their overheads and calculating what it costs to run their business and adding them together to get this break-even figure. So when they've been posting in the community over weekend, all of them have said, Craig, we haven't been charging enough. That's why we're not making money. Which basically means for all the months or years they've been in business, every single day, them or their team have left their house to get in the van to go and do a job. They've actually been losing money every single day because they didn't know how to work out their break-even figure, hourly rates and overheads. And that's why they're not making money, because the basics are wrong. I mean, we've not even come on to the point of the calculator yet where we price a job and we look at adding margins on for labour and materials and gross and net profit. We've not even come to that yet, and they're losing money straight off the bat. Now, I'm guessing if you've not gone into that level of detail on how you work these out, you too will be losing money. Why would you set up a business to lose money before you've even left your house in the morning? It's crazy. But it don't stop there, because also on this calculator, we've built in a section which is about your break-even figures. Because remember, all we're talking about at the minute is the break-even on your labour and your overheads. You haven't made a penny yet. So what we've done is we've built this calculator in that shows you what your break-even figures are every single day, hour, week, month, quarter, annually. It just pulls everything on and works it out yourself. So for example, I've just clicked onto the break-even part of the calculator and it's automatically added everything up. It's taken the £58,063 of the cost of employing that member of staff. It's pulled in the £24,000 worth of overheads. This is now calculated an annual break-even of £82,063, which means you've got to turn over £82,063 of profit that year just to pay for this. It's also worked me out my quarterly break-even figure, which is £20,516. It's then worked out my monthly break-even figure, which is £6,839. My weekly break-even figure is £1,784. My daily break-even figure is £357. And my hourly break-even figure is £51. So I know that I've got to cover these costs before I've made a single penny. So have you calculated your labour and your overheads, and do you know what your break-even figures are in your business? Because you should do, or otherwise you're winging it, and we can't afford to keep winging it with your business. Now, let's say for argument's sake that you are not charging enough, but there's only you in your business, or there's only a couple of you doing one job. That's bad enough in itself. But if you were to start to scale a business and you're taking on more staff, more jobs, more overheads, and behind the scenes, you've already set yourself up for failure because you're not making enough profit, and you compound all that, then all of a sudden, That money that you're losing all day on one person escalates because you're now losing it on 10 people, right? Which literally could be thousands a day. You could be thousands a day out when you start to scale your business. I mean, why would you set up a business to get to end of week and already be $3,000 out of pocket? You wouldn't do it, would you? But some of you are doing this. Hence the reason why I thought it would be important for me to walk you through these numbers. And yeah, you might have to listen to this episode a couple of times and stop it and pause it. But come on, why is it taking me to explain and teach you this? Surely your accountant should be doing this. Surely your accountant should have sat down and worked out all these numbers for you. I mean, what are you paying your accountant for? If your accountant's not helping you to increase your profits and stop overpaying on taxes, if they're not doing that, what are they doing? I would question, have you got the right accountant? Which is why we brought Julie into the Trades Freedom Club and into our Inner Circle and Growth Club to help our members get that support that they need for financial planning of their numbers and scaling the business. So if by listening to this episode, you can work these out, amazing, job done. But remember, beyond this, these are just the basics. What we've got to learn next is how we actually price a job correctly. What markup do we put on our labour? Because at the minute, remember, we're only breaking even. What markup percentage are we going to put into our materials to make sure that we are marking our materials up? How do you price the rest of the job? And how much profit margin do you add on the job at the end? And again, this calculator is going to do all that for you, as well as working out a profit and loss after you've done the job, so you can see what your gross profit and your net profit margins are on each job. And that's what the rest of the calculator is going to do for you. Now, if you're listening to this and you're thinking, Craig, I need help with all these numbers, because we've already established that we can't afford to mess up on the numbers. Nobody wants to be that busy fool. We don't want you working and grafting your nuts off for next God knows how many years to not make any profit. Now, there's a lot more to understanding the numbers, and there's a lot more to how can we become more tax efficient? And what can we do to stop overpaying on taxes? And Craig, when we make profit, how can we get profit out of the business and start investing it into things maybe like property, or putting into pensions, or putting it into crypto like I do, to start making your money work for you so you're building generational wealth? All of this lot and a lot more is what we help our members with within the Growth Club. So if you need additional help and support, not just only on the profit and the tax and the numbers in your business, but on things like how to generate an avalanche of leads coming in, how to systemize and automate your entire business, how to build a team to start freeing up your time so you can leverage the team to start you making more profit, all of this lot and a whole host more, we work with our Growth Club members every single day within our Growth Club. And again, inside our Growth Club, the calculator that I've just been using now and demoing to you, albeit via audio, that is now sat inside our school classroom, waiting for you to download and start to use yourself. And literally, we've given you a training video on how to use this step by step. And on top of that, we've just added in a brand new course today into our classroom section, our online training from Julie, where she walks through these numbers and a load more. And also, there's a course in there about tax, all the different taxes from corporation tax to self-assessment tax, understanding things like director's loan account, and a whole host more is all inside that classroom waiting for you. So if you are serious about making more profit, not overpaying on taxes and having to learn how to make your money work for you once you've made the profit, consider hitting the link in and around the description of this episode to our Growth Club. Come into our Growth Club. We've got pre-recorded courses. We do live training on Zoom every single week for you to jump on. All them sessions are pre-recorded. So even though you haven't been a member for the last 3 months, every previous session's already recorded so you can catch it up on replay at a time that suits you. Remember, for things to change, you have to change, or all you'll ever have in your pocket is change. I'll catch up with you on next week's episode, and I'll meet you at the top. Thank you.